Touching base with the Aarti Industries management as well. Rajendra Gogri, the CMD, joins us right now. Good morning. Thank you so much for speaking with ET now. First up, we would like to understand a bit more about this contract that has been terminated. It's a 10-year long contract, and there's been an early termination as well. So, could you give us give us details on what led to this?
Yes. So basically, we are supposed to supply agrochemical intermediate, and the customer was supposed to manufacture a herbicide out of that and then formulate it in the market. And now customer has changed his strategy that instead of buying the intermediate and manufacturing itself in their own plant, they would like to buy the finished molecule itself. So the facility which because they're putting up a very new facility, so that project they are dropping or putting up a new facility, and instead of that, they would like to buy the finished molecule. That's a change in strategy on their end. Hello.
Okay, and given that they're triggering this termination of contract, you will be getting a compensation between 120 to 130 million US dollars. Would it be enough to sort of make up for the revenue loss that you would see eventually over the over the next decade?
Yeah, more or less, if you on a thumb rule, roughly, whatever the future earning we would have made out of that, because this will be more on upfront side. So we see that, there may not be any significant difference if you take on a current value of that. And another important thing is that all the asset will be still there. So our project will be on stream, and we'll be putting up that plant. And because the demand of that intermediate, even though it will not be for that customer, but we'll be able to supply to the other customers, as well as we can also think of doing tolling or going forward integration.
Hi sir, good morning. This is Varun Hirimat also joining in. Wanted to understand, in terms of your facilities, how much of your overall utilization was geared towards this contract, and now will that open up? And in the same facility for these products, could you find a replacement product, or is it dedicated for this only?
Yeah, currently we had put up for that last segment was for this particular product, but now we will evaluate, whether part of this facility can be utilized for some other product also. This particular product will be definitely manufacturing, but whether part of the facility we can use for other products or not, that evaluation we will be doing.
Okay, great, sir. And while we have you with us, just generally because of COVID and everything that's happening, what kind of cues are you getting from your customers? Is there any contraction in demand? Is there any hesitance to buy right now because prices are volatile? What's your sense on that?
Because this COVID ultimately led to economic slowdown across the globe, whether it's US or India. And that always leads to a less spending on a discretionary side, and product goes into that category. The demand contraction is seen, and it was expected. But we as a company about 60% of our operating profit comes from pharma, agro, and FMCG. So we don't anticipate a sizable impact of this demand decrease.
Okay, so then just if you want to leave us with, post the removal of this customer from your portfolio for FY21 and 22, by how much are you projecting your revenues, and will there be any change in the margins as well, revenue and margin both?
No, for FY21 and FY22 actually nothing changes. The way the compensation will kick in. So if you include the compensation for these 2 years, we don't see much changes in the next 2 years. It is the subsequent year which is coming as an upfront for us.
Right, great.
So there will not
Okay, thank you so much for joining us this morning. That was the management at Aarti clarifying on their recent termination, and it seems that through the compensation and other products, there will be no change to the FY21 or FY22 revenue or margins.